You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. And if we sound a little bit different, it's because we're not coming to you from our studio in Chicago. We're coming to you actually from the Options Industry Conference here in scenic and sunny Florida. And this is, of course, the show where we like to bring on guests, and this conference is full of them. So let's get right to it. Our next guests here on the program are Mark Davies, the CEO, and John Standerfer, the CTO, over there at S3. Gentlemen, welcome to the program.
Welcome. Thanks for having us.
And let's start, I know, Mark, you were on once a while ago, and John, you've never been on. So let's start with each of you doing a quick overview for our audience of your background in the options and derivative space and how you found your way over there to S3.
All right. I'm actually one of the founders of S3. We were founded in 2002, and we got into options best execution analytics in 2006. So we've been there ever since.
Yes, an interesting space, to say the least. And John, same question for you.
I've been at S3 since 2005, and before that I was at CyberTrader and Charles Schwab working on a lot of the option tools for the active traders.
And you mentioned it, let's kind of get right into it. It's an interesting area of the space, not one we get to talk about a lot, so I'm kind of happy to have you guys on. This whole analytics, TCA realm of the space. Describe for some of our listeners maybe who aren't familiar with that. First off, what the heck it is you guys actually do over there at S3, and then we'll get into some of the specifics.
So fundamentally what we do is we identify trades, we compare internal trades to market data. So we look at how well your trades perform against the market and compare those and determine whether you get a good execution, a bad execution, a fast execution, a slow execution, and really determine what it costs you to trade.
Yeah, it's an interesting area of the space, and certainly as options has become more fragmented and more difficult, and spreads have become, liquidity is an issue. Of course, we'll get to that in a little bit. That's certainly something, particularly for all these trading firms who have to watch every penny. I'd imagine they're probably beating a path to your door these days as they're trying to maximize every transaction.
We're certainly getting a few calls these days.
Yeah, I'd imagine. It's good to be one of the early players in a space. We have some experience with that. Well, it's interesting. I've had a lot of guests come through here already today, and it's certainly been, I think, a very different conference here than it was last year. Last year, if you guys recall, it was very dire. It was very dark. Volume was kind of trending low. Volatility was non-existent. Just about everybody I talked to was, oh, woe is me. There's no volume. There's no volatility. Pick your market segment, retail, institutional, whatever. They were all leaving the business. It was just very dire. I left the conference very depressed. This year, different story entirely. Volatility is back in a big way. Volume is back in a big way. I'm curious, for you guys, what's your takeaway so far from the first, not quite the first half, but the first, partway through Q2 here of 2018. You think we're on some sort of sustainable trend? I mean, volume up close to 30% so far at this point over this time last year. Is this something you think is sustainable, or you think talking to your clients and seeing kind of what they're into, this is kind of just shall we say a short-term aberration?
Q1 was obviously great for many of our clients as well as for ourselves. From what I've heard from our clients, they have, at least on the retail side, have already seen some slowdown as Q2 has started. April, the overall industry volumes were up, but on the retail side, from some of the things that I've seen from the public numbers out of our clients, the growth appears to have started to wane a little bit. I would not be surprised to see that trend continuing into May.
You know, it's interesting. Before we come down here every year, we like to take the pulse of our audience, see what they want us to talk about when we're down here. And so we put it out to them before we came down, gave them a bunch of different options, pun intended. And so far, with a day or two left here in the poll, it's trending down, though, I noticed, Gene, so it has getting a little bit lower. But we are seeing the liquidity issues in the option space kind of dominating. There was about half, now it's down to about 44% in the voting. I think some of that obviously clearly due to some, shall we say, some recent headlines about that issue. But clearly this is something that's probably near and dear to your guys' hearts. All the firms you're interacting with on the institutional side, is this a common refrain you're hearing from them? Are they encountering liquidity issues? And also, are you guys, as you're out there analyzing these executions, are you seeing these same kind of issues out there? And is this something that's alarming to you guys as well?
Absolutely. It's one of the most frequently asked questions we get, and we recently had some public data that we had put together that was referenced in the Wall Street Journal on an article just about that showed how the average quoted size for the SPY options had decreased substantially over the past 15 months.
Since the beginning of 2017, that volume has been trending downwards.
So this could ironically be good for your business, right? As people come to you guys, helping you try to navigate this less liquid environment, or are you of the opinion that bad liquidity, or not bad, but lower liquidity hurts everybody at the end of the day?
It's always a difficult thing, right? Because obviously we are in the best execution space, which tends to be regulatory as well as other things, and so things that may be good for our businesses aren't always good for our clients. So we don't want to push. We don't want to push reduced liquidity as a good thing for sure.
S3, we reduce liquidity. That would not be a good tagline out there. But you're right.
We're gonna edit that part out.
But you're right. It is an interesting kind of dynamic in the space right now. One of the reasons I like talking to kind of vendors and service providers like you guys is you work with a bunch of different firms. So you have a much more, shall we say, systemic view than, let's say, one exchange that's focused on one silo of products. So you're interacting with a lot of firms on a regular basis. This has been a constant drumbeat. I mean, the Wall Street Journal article aside, this has been a constant drumbeat at this conference for a long time now. The liquidity is trending in the wrong direction. What do you guys think? You guys are analyzing trades out there and executions day in, day out. What do you think we as an industry can do to maybe reverse this trend and try to get some more liquidity? You know, the data, I think Henry just showed it off here at the conference again. It's something like 19 names do half of all of the business in the space. You know, that's obviously not a long-term growth trajectory for the space. What do you think we could do to maybe reverse that trend?
Less option symbols. The
Spoken
growth,
like a true CTO. I like that.
the growth in the number of option symbols has been extreme over the past 10 years, with the additional extra strikes, the different weeklies, all the different products, and no one can point and say for sure that's why liquidity is down or why spreads have widened. But I think it's hard to argue that it hasn't made the entire industry more complex, especially from the retail perspective of looking to buy a call on even a mid-size name or a large name. There's now so many different things you have to go through. You want the weekly, you want the this, you want that. And of course there's that many more symbols that if you're a market maker, you have to be providing two-sided quotes to participate in. And so I think that is something that could be looked at to reduce the number of symbols to help funnel the interest. And as everyone has always said at every OIC, it's a quote-driven market, that the orders are coming in from retail and from other places because there are quotes that people want to execute against. And the move to wider spreads and the auctions and all the different symbols means there's less attractive quotes for potential order placers to interact with, because you never see the retail client who goes in and pulls up a chain and sees it's a $2 option, is 50 cents wide, and just shuts down the whole window because how much is it going to have to go up for me to make back the spread?
Yeah, that's kind of always been the drumbeat here. You're right that the quotes are the advertising. And right now, I don't think it's a very good advertisement out there for a lot of these products. Because you're right, people are going to see how wide these spreads are and just not even going to bother. Not going to try to work in the middle or try to get filled and price improve. They're just going to walk away and say the heck with it. So that's probably a detrimental thing to all involved. Another hot topic, which is probably near and dear to your guys' heart, again, another controversial one, and also impacting the liquidity issue, is this continued proliferation of trading venues out there. We saw MIAX now getting back into the pool with the proposed, I think, 16 coming online if it's approved by Q1 of next year. Again, kind of an interesting topic for you guys because probably the more the merrier for your guys' perspective, right? The more exchanges, the more people need TCA to maximize their execution. But on the flip side, you also maybe get to this point where adding more exchanges is like a tax on the industry in terms of the market makers, and it might impact that liquidity we were talking about before as well. So I'm curious, what are your guys' thoughts here on this proposed new exchange and in general this trend of increased proliferation of trading venues in the option space?
I've said this before several times on panels and such, and the reality is, if there's money to be made, people will open options exchanges. I mean, there's opportunities, and so people are going to do it. It's not something where, the free market will shut it down. There's opportunities, and people will open them. So until there's no more money to be made, well, we're going to keep getting more exchanges.
I had someone in here recently. I won't say who, and they made a prediction of 50 exchanges within a few. I think it was somewhat tongue-in-cheek, but it was also alarming at the same time to hear a number like that thrown around.
Because the other data point on the number of exchanges is to look at the number of exchanges on equities. And I think there's 30 different, execution venues, not even counting all the dark pools, and no one's complaining about liquidity on the equity side.
Yeah, you're right. It's a very different execution venue perspective. Well, you guys are obviously down here at the conference, not just to get the lay of the land, but also talk about kind of what's hot, what's new over there at S3. So I think it's been many years since you've been on, probably, Mark. I can't recall when. So I'm sure a lot has changed. Catch us up in terms of what are some interesting new products you guys are offering, some interesting new products or services you guys have up there on the site, and what's new coming down the pike from S3 these days.
Yeah, I mean, we're actually seeing a lot of interest on the TCA side. From everyone I have spoken to, it seems we're the only people really offering TCA in the options market. We have several buy-side clients. We have a substantial percentage of the sell-side market. And so we're just getting a lot of interest on the TCA products. Later in this year, we're going to be launching some new products that will probably be interesting to the options market, particularly those who handle surveillance, without saying what the product is, but you can probably guess. Getting into some more of that. So we're very excited by that future opportunity.
It is surprising. I don't want to wish competitors for you guys, but it is surprising that others have not seen the need for this and gotten into this space, because you're right. It is, equities are very simple, they're not binary, but they're very simple yes/no products. There's a quote, there's a bid ask, that's kind of it. Options, you have thousands of series and puts and calls and out of the money and in the money, and it's a much more nuanced space. So they require a lot more analysis in terms of execution. So I'm surprised more firms, maybe it's just a lack of sophistication, I don't know what it is, but it's always good to be niche and have that niche unto yourselves. So I speak from some experience in that space. I'm curious, one of the other big topics everyone's kind of hitting us up about these days, so I'm kind of getting people's pulse on it over here as well. A little bit of a different space, but everyone here, the conference and in the financial markets in general, is just awash, obsessed with everything crypto, all things crypto. When are we going to get crypto options? When are we going to get this? When are we going to get that? In fact, that was in our poll here this week as well. I'm curious, you guys work in a lot of different marketplaces. The crypto space seems like it's, shall we say, ripe for a little TCA. There's myriad venues, myriad quote-unquote exchanges. Not all of them talk to each other. You can get different prices at all different times. What do you guys have going on, or what do you have planned, should I say, for that side of the space? By the way, I think I'm legally obligated to ask you about crypto when you come on the show these days, so I'm just doing my duty.
I think that there may be opportunities in the future. I think right now we are looking at the market is so unknown. It's so far out into the Wild West that there's nothing to really be able to say whether you got a fair price or not, because there's no fair prices. It's very much. One cryptocurrency could be here today, gone tomorrow. Another could be here today, and it could be 500 today and 20,000 tomorrow. So it's not a market where I think there is a lot of demand for that yet. I think as the market matures and we figure out really, we don't even really know what crypto is, right? We don't. Is it what kind of asset class it is? There's a lot of questions as to what the product is, what the asset is, what the underlying value is. And I think that we're going to see, we need to see a little more maturity in the market before people really start to understand what, when you make a trade, really what's the value of that trade.
Yeah, you're right. It needs a little little bit more there before you can really kind of parse the tea leaves. Well, we kind of talked about a lot of different topics. You talked about liquidity, you talked about exchanges, talked about, even got the required crypto question in there. But that said, if there's something we didn't touch on that you want to share with our audience, or maybe you kind of just mentioned the regulatory product, but maybe you want to leave them with some other hint, some other tease of what's coming down the pike from S3, and now is the time. The floor is yours.
I mean, I think the important thing is that if you're looking for options TCA, we're the place to go.
It's good to be the only player in town. That's a good thing. Well, Mark and John, I'm glad we can get you guys on. We'll have to do it more frequently than perhaps once every however many years it's been since the last time you guys are on. We'll keep an eye on this side of the space because, as a growing number of venues, the growing concerns about liquidity come up. Obviously, I think TCA is a conversation we'll be having again in the near future. So I look forward to chatting with you guys again soon.
Thank you.
Thank you very much.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.